Based on the provided Bitcoin price history and forecast, a bullish strategy appears promising. The historical data shows a general upward trend, punctuated by minor corrections. The forecast predicts continued growth over the next week, suggesting a strong buying opportunity. Therefore, I recommend a long-term investment strategy with an entry price around $69,500, a stop loss at $68,000, and a target price of $78,000. This strategy capitalizes on the anticipated price appreciation, while mitigating potential downside risk. The stop loss price ensures that losses are limited if the market unexpectedly reverses. The target price is set based on the forecast and historical price patterns, aiming to capture significant gains as the price ascends. Ethereum exhibits an upward price trend over the past 2 weeks, with the forecast suggesting continued growth in the coming week. The historical price data reveals a consistent upward trajectory, indicating a bullish sentiment in the market. The current price is positioned near the support level of $2,746.91, suggesting a strong foundation for further price appreciation. The resistance level at $3,175.48 presents a potential ceiling for the short term. Given these factors, an aggressive investment strategy would involve taking a long position on Ethereum. A suitable entry price would be around $2,850, aligning with the forecast and providing a margin of safety above the support level. The stop loss should be set at $2,750 to mitigate potential downside risk. The target price could be set at $3,100, aiming to capitalize on the anticipated upward momentum towards the resistance level. This strategy leverages the bullish sentiment and projected price growth of Ethereum, while implementing risk management measures to protect against potential market reversals. Given the price trends and forecast for Ripple, a medium-term investment strategy appears most suitable. The historical price data demonstrates a recent upward trend, with the current price hovering near the support level of $0.5484. The forecast suggests a continued upward movement, with prices potentially reaching $0.568 over the next week. This indicates a bullish outlook in the medium term, making a long position advisable to capitalize on the anticipated price increase. For this strategy, an entry price of $0.549 would allow you to buy in just above the support level, minimizing risk while still capturing potential upside. The stop loss should be set at $0.535 to protect against a sudden downturn, while the target price should be $0.565, aiming for a modest profit within the medium-term timeframe. This approach balances risk and reward, allowing you to participate in the potential upward movement of Ripple while mitigating potential losses. Solana shows a strong upward trend in its historical price data, with a recent surge to around $199. The forecast predicts further growth, reaching $214 within the next week. This positive outlook, coupled with the price being close to the support level of $179.43, suggests a favorable environment for a long-term investment. Given the current price and the forecast, a long position is recommended. To implement this strategy, an entry price of $195 could be considered, allowing you to buy in at a slightly discounted price before the predicted surge. A stop loss at $180 would protect your investment from unexpected downturns, while a target price of $210 would enable you to capitalize on the anticipated price increase. This strategy aims to profit from the sustained upward momentum of Solana in the medium to long term. Given the Cardano price history and forecast, a bullish investment strategy is suggested. The historical price data demonstrates an upward trend, with recent fluctuations around the $0.35 mark. The forecast projects continued growth, reaching $0.541 within the next week. This indicates potential for significant returns in the short to medium term. A long position is recommended, with an entry price around $0.355, slightly below the current price to allow for a small buffer. The stop loss should be set at $0.334, the recent low point, to minimize potential losses. The target price is set at $0.491, aligning with historical high and the forecast's upward trajectory. This strategy capitalizes on the anticipated price increase while managing risk through a well-defined stop loss. Based on the provided information about SU coin, a medium-term investment strategy appears to be most suitable. The historical price data demonstrates a volatile but generally upward trend, while the forecast suggests continued growth, reaching prices above $2.8. The absence of clear support and resistance levels indicates potential for short-term fluctuations. Therefore, a long position is recommended. An entry price of $2.32, aligning with the current price and the recent peak, is suggested. A stop-loss order should be placed at $2.29, slightly below the recent dip, to limit potential losses. Target price should be set at $2.8, reflecting the optimistic forecast. This strategy allows for participation in the potential upside while mitigating risk through a well-defined stop-loss mechanism. Given the price trends and forecast for Filecoin, a medium-term investment strategy appears suitable. The historical prices show a recent upward trend, with the current price hovering near the support level of $3.862. The forecast indicates further price increases, suggesting Filecoin could reach $4.09 in the coming weeks. This upward momentum, combined with the proximity to the support level, presents a favorable entry point for a long position. Therefore, a medium-term investment strategy in Filecoin would involve entering a long position at the current price of around $3.862. A stop loss should be placed slightly below the support level at $3.75 to protect against unexpected downward movements. The target price could be set at $4.15, aiming to capture a significant portion of the anticipated price appreciation. This strategy allows for capitalizing on the bullish momentum while managing risk through a well-defined stop loss. Based on the provided price information for Theta network, a medium-term investment strategy appears to be the most suitable approach. The historical price data shows a recent upward trend, with the price hovering around $1.22. The forecast suggests a continued upward trajectory, reaching $1.27 over the next week. This indicates a bullish sentiment in the short to medium term. Therefore, a long position is recommended for Theta network. An ideal entry price would be $1.21, aligning with the current price and offering a slight margin of safety. The stop loss should be set at $1.19, below the recent lows, to protect against potential short-term reversals. The target price could be set at $1.27, aligning with the forecasted high, allowing for a reasonable profit potential within a medium-term time frame. This strategy capitalizes on the expected upward momentum while mitigating risk through a well-defined stop loss. Based on the provided price history and forecast for Dogwifhat, a cautious short-term investment strategy appears most suitable. The recent price history shows a downward trend, with the current price hovering near its support level. The forecast indicates further price declines in the coming week, suggesting a bearish outlook. Therefore, an investment strategy involving a short position is recommended. An entry price of $2.38, aligning with the recent price lows, would be appropriate. A stop-loss order should be placed at $2.47, slightly above the current price, to limit potential losses if the price unexpectedly rises. The target price should be set at $2.32, aiming to capture a portion of the anticipated decline. This strategy allows for a controlled exposure to the potential downside movement of Dogwifhat while managing risk effectively. Based on the provided price information for Stellar, a medium-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend with recent price movements hovering around the support level of $0.098. The forecast predicts a gradual upward movement, reaching potential targets of $0.102 and beyond. This suggests a bullish outlook for Stellar in the coming weeks. To capitalize on this potential, a long position is recommended. An entry price of $0.098, aligning with the current support level, would minimize initial risk. A stop-loss order should be placed at $0.096 to protect against unexpected price drops. The target price could be set at $0.102, aiming to profit from the forecasted upward movement. This strategy allows for a medium-term investment horizon, enabling the potential for significant gains while managing risk effectively. Based on the provided historical price data and forecast for Starknet, an aggressive short-term investment strategy would focus on a long position. The historical prices demonstrate a general upward trend, with recent fluctuations suggesting a potential for further growth. Forecast prices project continued upward momentum, reaching up to $0.453 in the coming week. Furthermore, the current price sits comfortably above the support price of $0.4346, indicating strong underlying support. Therefore, a long position is recommended for Starknet. An ideal entry price would be around $0.406, aligning with the recent price action and the forecast. To manage risk, a stop-loss order should be placed at $0.398, slightly below the recent dip. The target price could be set at $0.4881, the resistance level, aiming to capitalize on the potential for a significant price increase. This strategy leverages the positive price momentum and forecast, aiming to generate profits from the anticipated upward movement of Starknet in the short term. Given the price trends and forecast for PENDLE, an optimistic investment strategy would focus on a short-term approach to take advantage of the relatively stable upward momentum. The historical prices show a consistent upward trajectory, with the current price near its forecast and near the support level of $4.938. The resistance is at $5.85, indicating that there is still some room for upward movement. In this scenario, a long position is advisable to capitalize on the potential for a price increase towards the resistance level. For an aggressive short-term investment strategy, an entry price of $5.15 would be ideal, aligning with the forecasted price. The stop-loss should be set at $5.00 to protect against any unexpected price retracement. The target price should be set at $5.75, allowing you to take profits before the market potentially encounters significant resistance at $5.85. This strategy aims to capture a portion of the anticipated price increase within a short time frame. Based on the provided price information for render, a medium-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend with recent dips, while the forecast suggests a slight upward movement in the coming week. The support price at $5.207 acts as a potential floor for the asset, indicating a level where buying pressure might emerge. Conversely, the resistance price at $5.609 presents a hurdle for further price appreciation. Therefore, a long position in render is recommended for a medium-term investment horizon. A suitable entry price would be around $4.85, slightly below the current price and the predicted lowest point in the forecast. A stop-loss order should be placed at $4.70 to limit potential losses if the price drops below the support level. The target price can be set at $5.50, aiming to capitalize on the potential upward movement towards the resistance level. This strategy allows for potential profit while mitigating risk by utilizing support and resistance levels as well as the forecast information. Based on the VeChain price history and forecast, a short-term investment strategy appears to be the most suitable approach. The recent price history shows a slight upward trend, but the forecast indicates a potential pullback in the coming week. The support price at $0.02247 and the resistance at $0.0235 suggest a tight trading range. Therefore, a short position is recommended with an entry price around $0.0228, slightly above the current price. The stop loss should be set at $0.023, protecting against any unexpected upward surge. The target price could be $0.0218, aligning with the forecast and allowing for potential profit before the price potentially rebounds. This strategy aims to capitalize on the anticipated short-term price correction while managing risk effectively. Given the provided price information for Binance Coin, a medium-term investment strategy appears most suitable. The historical price data reveals a recent upward trend, with the price fluctuating around the support level of $606.3. The forecast price suggests continued upward movement, reaching up to $649 within the next week. This indicates a bullish sentiment in the short to medium term. Therefore, an investment strategy focused on a long position in Binance Coin is recommended. Conservative entry price would be around $610, allowing you to buy in after a potential minor pullback. The stop loss should be set at $605 to mitigate risk, while the target price could be set at $630, aiming to capitalize on the forecasted price increase. This strategy allows for potential profits while managing risk effectively within a medium-term investment horizon. Given the price trends and forecast for Conflux, a short-term investment strategy focusing on a long position seems appropriate. The historical prices show a slight downward trend, but the forecast suggests a potential reversal, with prices expected to rise towards $0.157. The current price is close to the support level of $0.1558, indicating a potential buying opportunity. The resistance level of $0.1821 suggests that there is room for further upward movement. Therefore, a long position is recommended to capitalize on this potential price increase. An entry price of $0.152 would allow you to buy in at a favorable price point. The stop loss should be set at $0.147 to limit potential losses if the price declines. The target price could be set at $0.16, aiming to capture a significant portion of the anticipated price increase. This strategy leverages the short-term bullish forecast and the potential for a price rebound from the support level. Based on the provided data for Worldcoin, a cautious investment strategy is recommended. The 2-week price history demonstrates a volatile trend, with a recent dip towards the lower end of the range. While the forecast suggests a slight upward movement, the potential for further decline remains. Given this uncertainty, a short-term investment horizon is advisable to minimize risk. A long position should be avoided this time due to the potential for further price drops. Instead, consider entering a short position if the price surpasses $2.04. Set a stop-loss order at $2.06 to limit potential losses if the price unexpectedly rises. The target price should be set at $1.93, aligning with the support price and the forecasted low point. This strategy aims to capitalize on the anticipated downward movement, while mitigating risk through a tight stop-loss order and a conservative target price. Remember, the cryptocurrency market is highly volatile, and careful risk management is crucial. Based on the Avalanche price information provided, a bullish investment strategy is recommended. The 2-week price history demonstrates an overall upward trend, with the price currently hovering near its forecast and support level. The forecast predicts continued price growth, reaching as high as $31 in the coming week. This suggests a strong potential for Avalanche to appreciate in value. Therefore, a long position is advised for a medium-term investment horizon. An ideal entry price would be around $29, aligning with the support price and offering a good entry point for potential upside. The stop loss should be set at $28, providing a buffer against unexpected price corrections. The target price can be set at $32, aiming to capitalize on the projected price increase and reaching the resistance level. This strategy balances risk and reward, allowing you to participate in the potential upside of Avalanche while mitigating potential losses. Given the price trends and forecast for Jupiter, a moderately aggressive investment strategy would focus on a medium-term approach to capitalize on the anticipated upward momentum. The historical prices show a consistent upward trajectory, with the current price near its forecast and close to the support level of $1.1587. The resistance is at $1.2651, indicating that there is still room for upward movement. In this scenario, a long position is advisable to capitalize on the potential for a price increase towards the resistance level. For a medium-term investment strategy, an entry price of $1.16 would be ideal, aligning with the forecasted price and slightly above the support level. The stop loss should be set at $1.13 to protect against any unexpected price decline. The target price should be set at $1.24, slightly below the resistance level, allowing you to take profits before a potential pullback. This strategy balances risk and reward, aiming to capture a significant portion of the anticipated price increase while mitigating potential losses. Based on the provided EOS price data, a short-term investment strategy appears most suitable. The 2-week price history reveals a fluctuating trend with a slight upward bias. The forecast price suggests continued growth, reaching a peak around $0.486 within the next week. However, the resistance level at $0.5401 indicates potential limitations to this upward movement. Therefore, a long position is recommended to capitalize on the anticipated price increase towards the forecast peak. A conservative entry price of $0.457 aligns with the forecast and offers a reasonable margin of safety. A stop-loss order should be placed at $0.442, the recent low point, to minimize potential losses. The target price can be set at $0.48, aiming for a profit before encountering the resistance level. This strategy allows for participation in the expected upward trend while mitigating risk through a well-defined stop-loss mechanism. TRON shows a downward trend in its 2-week price change. The forecast also indicates further declines in the coming week, suggesting a bearish outlook for the short term. Given this trend, a short position on TRON appears to be the most suitable strategy. To implement this strategy, an entry price of $0.163 could be considered, aligning with the current price and the forecasted decline. A stop loss at $0.164 would help mitigate potential losses if the price unexpectedly rebounds. The target price should be set at $0.16, slightly below the support price of $0.16, allowing for profit taking before the market potentially finds support. This short-term strategy aims to capitalize on the anticipated price decline of TRON, taking advantage of the bearish market sentiment. Given the price trends and forecast for, say, a medium-term investment strategy focusing on a long position appears promising. The historical prices demonstrate a general upward trend, with recent fluctuations suggesting consolidation. Forecast indicates continued upward movement, with prices projected to reach $0.45 within the next week. The entry price for this strategy should be around $0.41, slightly below the current price and near the support level of $0.4287. This allows for a margin of safety while capturing potential upside momentum. The stop loss should be placed at $0.40, providing a buffer against unexpected price declines. The target price can be set at $0.46, aligning with the forecast and the resistance level, allowing for a healthy profit margin. This strategy capitalizes on the anticipated price increase while managing risk effectively. Based on the provided Shiba Inu price history and forecast, a medium-term investment strategy appears promising. The historical data shows a fluctuating price pattern, with recent dips followed by rebounds. The forecast indicates a continued upward trend, suggesting potential for growth in the coming weeks. Therefore, a long position is recommended, aiming to capitalize on this potential upward movement. A suitable entry price would be around $0.000091, slightly above the current price and the support level. The stop loss should be set at $0.00000179, below the recent dip, to limit potential losses. The target price could be around $0.00002022, aligning with the forecast and representing a reasonable profit margin. This strategy allows for participation in the potential upside while managing risk through a well-defined stop loss. Coin's historical price shows a fluctuating trend with periods of both upward and downward movement. The forecast indicates a potential for continued growth over the next week, reaching prices above its current levels. However, it is important to note that the lack of support and resistance levels makes it difficult to pinpoint precise entry and exit points. Given the upward forecast and the potential for short-term gains, a bullish strategy focusing on a short to medium-term investment horizon appears suitable. A potential entry price could be around $0.165, aligning with the recent price action and the lower end of the forecast range. The stop loss should be set slightly below the entry price at $0.16 to minimize potential losses if the price retraces. The target price could be set around $0.21, taking advantage of the potential upward movement projected by the forecast. This strategy aims to capitalize on the anticipated short-term price increase while managing risk through a defined stop loss. Remember, this is a speculative investment, and market conditions can change rapidly. Based on the provided hooked protocol price data and forecast, a short-term investment strategy appears most suitable. The historical price data shows some volatility but generally lacks a strong upward trend. The forecast also suggests a slight downward movement over the next week. This indicates a potentially bearish outlook in the short term. Considering these factors, a short position on hooked protocol is recommended. An entry price of $0.39, close to the current price and the historical high, would be appropriate. A stop-loss order should be placed at $0.401, slightly above the current price, to limit potential losses. The target price could be set at $0.371, aligning with the lowest forecast price, allowing for potential profit before the market potentially reaches support. Aevo shows a recent downward trend in its price history, with the forecast indicating further declines in the coming week. The current price sits close to the support level of $0.337, suggesting potential for a bounce. However, the forecast suggests a dip towards $0.317, indicating a bearish outlook in the short term. Considering these factors, a short-term investment strategy focusing on a short position seems more suitable. An aggressive short-term strategy could involve entering a short position at $0.336, aligning with the current price and anticipating a potential drop towards the forecast low of $0.317. A stop loss could be placed at $0.345 to limit potential losses if the price unexpectedly surges. The target price could be set at $0.310, allowing for a profit margin before reaching the support level. This strategy capitalizes on the anticipated price decline, while managing risk through a well-defined stop loss. Based on the provided price history and forecast for Coin, a short-term investment strategy appears most suitable. The recent price history shows a downward trend, with the forecast indicating further declines. The current price is near the support level of $0.007249, suggesting a potential bounce. However, the forecast suggests a continued downward trajectory towards $0.00652 over the next week. This indicates a bearish outlook in the short term. Therefore, a short position on Coin is recommended for an aggressive short-term investment strategy. An entry price of $0.00713 could be considered, aligning with the current price and the recent downward trend. A stop loss should be placed at $0.007249, just above the support level, to mitigate risk in case of an unexpected price surge. The target price could be set at $0.00652, the forecasted lowest price, allowing for potential profits before the market potentially reaches the support level. Given the price trends and forecast for Coin, a medium-term investment strategy appears promising. The historical prices demonstrate a recent upward trend, with the current price hovering near the support level of $0.01807. Forecast predicts a continued upward trajectory, suggesting Coin could reach $0.019. This indicates a bullish outlook in the medium term, making a long position a suitable strategy to capitalize on the potential for price appreciation. For this strategy, an entry price of $0.0184 would be ideal, slightly above the current price and below the resistance level. The stop loss should be set at $0.0178, slightly below the recent support level, to protect against any unexpected price decline. The target price should be set at $0.0192, aligning with the forecast's highest predicted price. This approach allows for potential profits while mitigating risk. Given the price trends and forecast for PEP, a short-term investment strategy focusing on a long position appears promising. The historical prices demonstrate a slight upward trend, with the current price hovering near the forecast and support level. The resistance level is relatively high, suggesting potential for further price increases. Therefore, an aggressive short-term investment strategy would involve entering a long position at the current price, around $0.000017, with a stop loss set slightly below the support price at $0.000015 to minimize risk. The target price should be set at $0.000113, aiming to capture potential gains as the price approaches the resistance level. This strategy capitalizes on the positive forecast and the current price positioning, offering a potentially profitable opportunity for short-term traders. Based on the provided price information for TRON coin, a short-term investment strategy appears to be the most suitable approach. The historical price data reveals a slight downward trend, with recent fluctuations hovering around the $4.80 to $5.00 range. The forecast suggests a continued upward movement, but the pace of this increase is relatively modest. Given this outlook, a long position might not yield significant returns within a short time frame. Therefore, a short-term strategy focusing on a short position seems more promising. An entry price of $4.95 aligns with the current price and allows for potential profit, as the price potentially dips towards the support level of $5.182. A stop loss could be set at $5.05 to limit potential losses if the price unexpectedly surges. The target price should be set at $4.80, aiming to capture a decent portion of the anticipated decline. This strategy capitalizes on the short-term price fluctuations, while mitigating risk with a well-defined stop loss. Given the price trends and forecast for Bitcoin Cash, a bullish investment strategy would focus on a medium-term approach. The historical prices show a recent upward trajectory, with the current price hovering near the support level of $375.1. The forecast suggests Bitcoin Cash could continue to rise, potentially reaching $408 in the coming weeks. This indicates a positive outlook in the medium term, making a long position the most suitable strategy to capitalize on the anticipated price increase. Therefore, an investment strategy for Bitcoin Cash would involve entering a long position at the current price of around $377. A stop loss should be placed at $353 to protect against unexpected price drops. The target price should be set at $400, allowing for a healthy profit margin before reaching the resistance level of $439.0. This strategy balances risk and reward, aiming to capitalize on the bullish momentum while mitigating potential losses. Based on the provided Chainlink price data and forecast, a short-term bullish investment strategy appears to be the most suitable approach. The historical price data reveals an upward trend, with the price consistently hovering around the support level of $12.95. Forecast predicts a continued upward trajectory, reaching as high as $14. This suggests a potential for Chainlink to appreciate in value over the next week. Therefore, a long position is recommended with an entry price of $13. A stop-loss order should be placed at $12.95 to limit potential losses if the price unexpectedly drops. The target price should be set at $14, aiming to capture the anticipated price increase. This strategy capitalizes on the bullish momentum and potential for short-term gains while mitigating risk through a well-defined stop-loss order. Polkadot presents an intriguing investment opportunity with its recent price history and forecast. The historical price data shows a volatile but generally upward trend, with the price currently hovering near the support level. The forecast indicates continued upward momentum over the next week, suggesting a bullish outlook. Given this positive outlook, a long position in Polkadot appears to be a suitable strategy. To execute this strategy, an entry price of $4.20 could be considered, allowing for a small margin of safety below the current price. The stop loss should be set at $4.10 to protect against any unexpected downward movement. The target price could be set at $4.70, aligning with the forecast and offering a substantial potential profit. This strategy capitalizes on the anticipated upward price movement of Polkadot, aiming to generate high returns within a relatively short time frame. Based on the provided price information for Near Protocol, a cautious investment strategy with a medium-term perspective appears most suitable. The historical price data shows fluctuations, but the recent trend suggests a potential for upward movement. The forecast price indicates a slight increase over the next week, aligning with this bullish sentiment. However, the price is currently near its support level, indicating potential vulnerability to a pullback. Therefore, a long position is recommended with a cautious approach. The entry price should be around $4.25, slightly above the current price and below the resistance level. The stop loss should be set at $4.12, the support level, to minimize potential losses. The target price should be set at $4.685, the resistance level, aiming to capitalize on the potential upward movement. This strategy allows for potential profit while mitigating risk through a well-defined stop loss. Based on the provided information for stacks, a cautious short-term investment strategy is recommended. The 2-week price change shows a downward trend, and the forecast indicates further declines. The support price at $1.458 suggests a potential floor for the price, while the resistance at $1.865 highlights the current struggle to break through upward momentum. Therefore, a short position is advisable to capitalize on the anticipated price decline. An entry price of $1.68, slightly above the current price and near the recent high, would allow for a small margin of safety. The stop loss should be set at $1.74, above the recent high and the entry price, to protect against unexpected upward movements. The target price should be $1.48, aligning with the support level and allowing for a potential profit while minimizing risk. This strategy aims to capitalize on the short-term bearish sentiment surrounding stacks. Given the price trends and forecast for Aptos, a medium-term investment strategy focusing on a long position appears promising. The historical prices demonstrate a clear upward trend, with a recent dip followed by a rebound. The forecast suggests continued growth, reaching $10.0 in the next week and potentially higher. The support price at $9.6 provides a safety net, while the resistance at $13.1468 indicates room for further price appreciation. Therefore, an ideal entry price for this strategy would be around $9.8, aligning with the recent price action and the forecast. A stop loss at $9.65 would safeguard against unexpected downward movements, while a target price of $10.5 allows for a healthy profit margin, considering the forecast and potential for further upside. This medium-term approach capitalizes on the anticipated growth trajectory of Aptos while managing risk effectively. Based on the provided price information for Litecoin, a medium-term investment strategy appears to be the most suitable approach. The historical price data shows a slight upward trend, with the recent price hovering around the support level of $71.21. The forecast suggests a continued upward movement, reaching a potential high of $76 over the next week. This indicates a bullish outlook for Litecoin in the short to medium term. Therefore, a long position is recommended for this investment strategy. The entry price should be set at $71.50, slightly above the current support level, allowing for a buffer against potential minor price fluctuations. The stop loss should be placed at $70.50, below the recent lows, to limit potential losses. The target price should be set at $75, aiming to capture a significant portion of the anticipated price increase. This strategy balances risk and reward, allowing for potential profits while mitigating potential losses. Given the price trends and forecast for Uniswap, an aggressive investment strategy would focus on a long-term approach to capitalize on the upward momentum. The historical prices show a consistent upward trajectory, with the current price hovering near the support level of $8.146. The forecast suggests continued growth, with prices potentially reaching $9.61 in the coming weeks. This indicates a bullish outlook in the medium to long term. Therefore, a long position is advisable to capitalize on the potential for a price increase towards the resistance level of $9.318. An ideal entry price would be around $8.50, allowing you to enter the market at a price slightly above the current level and below the predicted peak. A stop loss could be placed at $8.15 to protect against unexpected price drops, while a target price of $9.20 would allow you to lock in profits before the price potentially reaches its resistance level. This strategy aims to capture a significant portion of the anticipated upward movement while managing risk effectively. Given the price trends and forecast for Bittensor, a cautious investment strategy would focus on a short-term approach. The historical prices show a fluctuating trend with recent dips, while the forecast indicates further potential declines. The support price at $485.3 suggests a potential floor for the price, while the resistance at $525.9 indicates a significant barrier to upward movement. Considering these factors, a short position appears to be the most suitable strategy to capitalize on the anticipated decline. An aggressive short-term investment strategy could involve entering a short position at $510, aligning with the current price and recent fluctuations. The stop loss should be set at $520 to protect against any unexpected upward price movements. Target price could be set at $480, aiming to profit from a decline towards the support level. This strategy acknowledges the potential for short-term volatility, while seeking to capitalize on the bearish outlook suggested by the price trends and forecast. Based on the provided internet computer data, a medium-term investment strategy appears most suitable. The historical price shows a fluctuating trend with periods of both upward and downward movement. However, the forecast indicates a consistent upward trajectory, suggesting potential for growth in the coming weeks. The current price is relatively close to the support price, indicating a potential buying opportunity. Therefore, a long position is recommended for a medium-term investment strategy. The entry price should be set at $7.8, aligning with the current price and offering a good entry point. The stop loss should be placed at $7.6, just below the support price, to minimize potential losses. Target price can be set at $8.6, aligning with the highest predicted price in the forecast, allowing for a healthy profit margin. This strategy capitalizes on the predicted upward trend while managing risk through a well-defined stop loss. Artificial Superintelligence Alliance shows a positive trend in both its historical prices and the forecast. Price has been steadily increasing, and the forecast predicts further growth in the coming weeks. The support price of $1.411 indicates a strong level of buying pressure, while the resistance price of $1.702 suggests that there is still room for upside potential. Given this bullish outlook, a long-term investment strategy is recommended. To capitalize on this upward trend, we can enter a long position at the current market price around $1.42. A stop loss order should be placed at $1.38 to minimize potential losses if the price drops unexpectedly. The target price can be set at $1.65, aiming to capture a significant portion of the predicted price increase. This strategy allows for a balanced approach, allowing for potential gains while mitigating risk. Given the price trends and forecast for Optimism, a conservative investment strategy would focus on a short-term approach. The historical prices show a slight downward trend, with the current price hovering near the support level of $1.545. The forecast suggests a potential dip towards $1.56 before a slight recovery, $1.63. This indicates a sideways movement with a slight bearish bias in the short term. Therefore, a short position is advisable to capitalize on the anticipated dip. An entry price of $1.59, slightly above the current price, allows for some room for price fluctuation before entering the trade. The stop loss should be set at $1.63 to protect against any unexpected upward movement. The target price should be set at $1.545, aligning with the support level, ensuring you lock in profits before the price potentially rebounds. Based on the Ethereum Classic price data, a short-term investment strategy appears to be the most suitable approach. The historical price data reveals a consistent upward trend, with the current price hovering near the forecast price and the support level. The resistance level, while present, indicates that there is still room for further upward movement in the short term. Therefore, a long position is recommended to capitalize on this potential price increase. To implement this strategy, an entry price of $20 would be appropriate, aligning with the current price and the forecast. A stop-loss order should be placed at $19 to limit potential losses if the price unexpectedly declines. The target price should be set at $22, taking advantage of the anticipated price increase toward the resistance level. This strategy aims to capitalize on the short-term upward momentum of Ethereum Classic while managing risk through a well-defined stop-loss order. Based on the provided Ethereum name service price information, a medium-term investment strategy appears to be the most suitable. The historical price data reveals a general upward trend, with recent fluctuations suggesting consolidation. Forecast price indicates continued upward momentum, reaching $19 within the next week. The support price of $18.8 provides a safety net, while the resistance price of $20.83 suggests a potential ceiling for the near term. Therefore, a long position is recommended for a medium-term investment strategy. An entry price of $18.9, slightly above the current price and the support level, would allow for a potential profit margin while minimizing risk. A stop loss at $18.5 would safeguard against unexpected price drops, while a target price of $20.5, below the resistance level, would offer a reasonable profit target. This strategy capitalizes on the anticipated upward trend while managing risk effectively. Based on the provided price history and forecast for Solana name service, a cautious short-term investment strategy appears most suitable. The 2-week price change demonstrates a downward trend, and the forecast suggests this trend may continue. Although the price is currently near its support level of $0.2318, the resistance at $0.2677 indicates a potential ceiling for upward movement. Therefore, a short position is recommended to capitalize on the anticipated price decline. An entry price of $0.24, slightly above the current price, allows for a buffer against immediate price fluctuations. The stop loss should be set at $0.248, above the entry price, to limit potential losses. The target price can be set at $0.22, aligning with the forecasted price range and providing a reasonable profit margin. This strategy prioritizes risk management while aiming to profit from the expected price movement. Based on the provided historical price data and the forecast for Aave, a medium-term investment strategy appears to be the most suitable. The historical price shows a period of volatility, with both upward and downward movements. However, the forecast indicates a consistent upward trend over the next few weeks. This suggests that while there might be short-term fluctuations, the overall direction of Aave is likely to be bullish. Therefore, an aggressive medium-term investment strategy would involve taking a long position in Aave. A reasonable entry price could be around $175, slightly below the current price and above the support level of $170.2. The stop loss should be placed at $173 to limit potential losses. Target price could be set at $190, aligning with the forecast and providing a potential profit margin. This strategy allows for capturing the anticipated upward momentum while managing risk through a defined stop loss. Based on the Injective price history and the provided forecast, an investment strategy focusing on a long-term perspective appears promising. The historical price data reveals a general upward trend, with the recent price hovering around $22, suggesting potential for further growth. The forecast also indicates continued upward movement, reaching $24 within the next week. This positive price action, coupled with the support price of $23.18, provides a solid foundation for a long position. Therefore, a long-term investment strategy with an entry price around $22, a stop loss at $21, and a target price of $24 appears suitable. This strategy capitalizes on the anticipated price increase while mitigating risk through a well-defined stop loss. By holding the position for a longer duration, investors can potentially benefit from sustained growth in Injective's price. Based on the provided price history and forecast for Polygon, an investment strategy focused on a short-term bullish outlook appears promising. The historical price data reveals an upward trend, with recent fluctuations suggesting a potential breakout. Forecast predicts continued upward momentum, reaching prices above the current levels. This indicates a favorable environment for a long position, aiming to capitalize on the anticipated price increase. Considering the current price, support, and resistance levels, a suitable entry point for a long position would be around $0.335. This price aligns with the recent price action and is slightly below the forecast's first target, setting a stop loss at $0.326, slightly below the recent lows, would help mitigate potential downside risk. The target price could be set at $0.393, aligning with the highest point in the recent historical price data and the forecast's final target. This strategy aims to capitalize on the short-term bullish momentum of Polygon, while managing risk through a well-defined stop loss.